Welcome to NCBA Money Mastery, where we break down banking products and show you how your money can work for you with the right financial partner. With us in studio today, we have an asset finance guru, Lennox Mugambi, who's gonna walk us through exactly what asset finance means for you. Welcome, Lennox.
Thank you, Mercy. Thank you for having me.
So we'll start up with a heavy word, asset finance. What exactly is asset finance?
In banking terms, asset finance is a short to medium-term financing to customers who are in need of acquiring movable assets.
Okay, and for people like me who use regular terms, what exactly does that mean?
So it's a 12 to 60 month facility that enables you acquire movable assets like plant and machinery, IT equipment, motor vehicles, and anything that is identifiable, tangible, and movable. It excludes buildings and land, because whereas they are assets, they are not movable. So anything that is movable, that is what asset finance is all about. So whenever you want to acquire any of these assets, you'll go to the bank and the bank will offer you an asset finance solution.
Interesting. So that pickup that I'm selling my mangoes from in Makueni, is that an asset?
It certainly is an asset.
Okay. So Lennox, what bank products fall under asset finance?
So we have hire purchase and we have operating lease. Now, hire purchase is a product that allows you to pay towards the acquisition of an asset in installments, and the moment you're done paying, you own the asset. But when it comes to a lease allows you to use the asset without the option of ownership.
Okay.
So at the end of the term of the lease, we do not cede ownership of the asset to you.
Okay, so on a lease case, if I do not own it, how then am I protected?
So there's something called quiet possession. The person who's leased the asset to you gives you the opportunity to have quiet possession of the asset. What it means is that you'll be able to use this asset as if it was your own. No one will come and interfere with how you use it, as long as you meet the specific terms of the lease. Yes. So, and then secondly, in case of any eventuality like an accident or maybe damage of the asset, there's insurance policies that are taken up. The insurance policy ensures that in case of any insurable risk, you're protected.
So again, we're using big terms here. Exactly what's a lease?
So a lease is a type of an asset finance product that allows you as a customer to use an asset that you don't own and to use it for a period of time. So if you can get into a 3-year lease, 5-year lease, that maybe in the case of the pickup you talked about for your mangoes, instead of going to buy the pickup, you can opt to lease it. So you come to the bank and the bank will go and buy for you the vehicle, and you pay us in installments. If it's a 3-year lease, after the end of the 3rd year, you're supposed to either return the vehicle back to us, and you can opt, assuming the vehicle still has a good useful life and because the usage has been good, you can decide to extend the lease for another 1 or 2 years. So you will give you the opportunity to extend the lease. The other option is that you might decide to return back the vehicle and get a newer one or even a bigger one. So those are options that are available to you under a lease.
Wow. So I now know what asset finance is, but why should I actually choose NCBA over any other financial within the market?
Okay, good question. First, NCBA is a market leader in asset finance. We've been doing asset finance for the last 60 years. So secondly, it means that we are the most experienced in terms of asset finance. Thirdly, we have a team of staff that understands asset finance more than anyone else in the market. Based on our experience, we're able to solution customers to meet their specific needs. And we do advise customers whether or not they need to take up an asset finance facility based on their requirements. So we're able to tailor-make solutions that speaks directly to their requirements. The other thing is that we've also created efficiencies around our processes. We have some of the most efficient processes in terms of execution of an asset finance transaction. And we have very good partners that we work with. We've built very good relationships over a period of time. So we have partners out there who have been with us for the last 60 years. We've seen each other grow. And for that reason, we're always there to support each other when transacting through asset finance.
Okay, great. You talked about efficiencies in processes. What sort of efficiencies are we talking about, other than the partners that you mentioned?
So today, if you come to NCBA Bank and when you're applying for a facility, we'll guarantee you a 12-hour turnaround time. So you come in the morning, initiate your application. By end of day, you'll get an offer letter from us. So that's one of the efficiencies we've created. Secondly, also, we have an online application that enables you to originate your application at the comfort of your office or your home. And it's the only one of its kind in the market. So you don't have to try and rush to the bank before they close the bank for you to initiate your application. You can do it anywhere, whatever time, whether it's on a Sunday, whether it's at midnight. So you can originate your application at the comfort of where you are without necessarily having to visit the bank.
Wow, you talked about 12 hours. That's like same-day approval, right?
Same day.
Wow. You also talked about some automated processes. Certainly means NCBA has taken the whole digital transformation and innovation agenda seriously. But what about your partners?
Good. We deal with most of the new motor vehicle partners, the likes of Isuzu, CMC Motors, Simba Colt, DT Dobby, most of the new motor, and Toyota as well. Most of the new motor vehicle dealers out there, we deal with them, and we always come up with schemes at negotiated terms with for our customers, so that our customers are able to benefit from the fact that we've had a long-standing relationship with our partners. And because of that, we've been able to negotiate very good terms that we end up passing on to our customers.
So I'm interested in an asset finance facility from NCBA. Exactly what are the terms?
Well, it depends on the kind of customer you are. If you're a corporate, say a large corporate, large telco company, we can finance you up to 100%, because especially if you have impeccable financials. When we are running schemes, we do finance up to a maximum of 95%, depending on the type of asset also that you are looking at. Outside schemes and for brand new vehicles, we do up to a maximum of 80%. We also are not just limited to financing of brand new vehicles. You might want to buy a used vehicle, like direct import vehicle from one of the local dealers. We will finance you at a range of between 70 and 80%, depending on the type of a vehicle. But at the end of the day, what determines what you call the loan to value ratio, meaning the percentage of what you're financing as a percentage of the total cost of the asset, is your financials. Your financials are either your income or your turnovers. So basically, we'll have to take you through a credit review process. The credit review process is what will determine your credit rating, and your credit rating is what will determine what percentage finance will give you. So if your credit rating is good, then it means that you're able to finance a higher percentage. If your credit rating is modest, it means that you may have a lower financing. In terms of credit rating, there are various things that we look at. So if you're an NCBA customer, we'll look at your bank statements, since you're already holding your account with us. If you're not an NCBA customer, we'll ask you to give us your statements from your other bank, which will do a review. On the basis of that, together with, we'll also do a check on the Credit Reference Bureau, CRB as we know it. And based on now, that will determine your credit worthiness, and on the basis of that, we'll now come up with what we call a loan to value ratio that is appropriate with your credit scoring. So
Lennox, most banks in advancing credit facilities ask for collateral, okay, all security. So in this case, I need asset finance. I don't own a parcel of land. I don't own any property. How does that then work for me?
Interesting question. In many cases, the assets that you are financing is the main collateral. We will not ask you for any additional collateral. However, there are certain cases where we may ask for additional collateral. Now, which are some of these cases? In a case where maybe the credit rating of a customer is not very strong, but we still believe in the business case that the customer has, we might ask the customer to give us some form of additional collateral that will come in and give the bank additional comfort. Now, the additional collateral might not be land. It could even be assuming they have another vehicle that is within certain parameters that the bank looks at. We might ask them to pledge the logbook for that additional vehicle as additional collateral. In other cases, we might come across big customers, multinational customers, or even large local corporate customers who are looking for huge financing, 700 million, a billion and over. And in cases where they are buying what we call, they are acquiring what we call highly specialized assets, we may ask for additional collateral just to give the bank comfort that they are committed to that particular purchase.
Makes sense. So, as an asset finance expert, Lennox, what advice would you give to your customers out there in respect to asset financing, generally speaking?
Yes, we say that cash is king, and your business needs cash flow to survive, or working capital to survive. A lot of the acquisition of the decisioning around acquiring assets should be made in the context of your ability to service the loan and also to maintain that asset that you're acquiring. Because when you acquire an asset, it comes with its own costs. Say, for example, if you acquire a truck, you need to insure it, you need to fuel it, you need to hire a driver or two, maybe a loader, and they are the usual maintenance costs that you will incur. So it doesn't necessarily mean that every time there's you want to expand, you should buy an asset. Especially in cases where you will not put that asset into full utilization. If you're just buying an asset so that you use it maybe 2 or 3 hours in a day, and then the rest of the day the asset will be idle, it may not be appropriate for you to take up an asset finance facility. That said, if you are planning to acquire these assets to, one, increase your revenue because of the pressure that your existing assets have, and means that you need to actually get another, say, truck to be able to supply more, or if you are planning to acquire these assets so that you get rid of the older asset that has become expensive to maintain, then taking up asset finance is a good idea. So at the end of the day, the need that you have as far as your business is concerned, and you'll see it from the business will tell you, hey, now I need an extra unit of a truck, a pickup, etc., to be able to deliver more. So that is what will determine whether or not it's important for you to come in and take up an asset finance. But there are also cases where we discourage customers. We tell them, look, at the level at which you're operating, it doesn't make sense for you to have an asset that will be idle for 3/4 of the period of time. So you're better off hiring. Then as you create growth and scale, then it will be the right time to acquire another asset.
So let's assume I found a business opportunity and I need asset financing. Should I buy or should I lease?
It is purely dependent on your financial circumstances at that point in time. The moment you purchase, it means that you're draining working capital out of your business. So your business will not have the necessary working capital to help in future orders and future growth. So in as much as, unless you have unlimited resources, we always discourage customers from using their money to buy assets. Instead, we usually encourage them to use that money to do what? To pump in and use it for additional working capital as the business grows. Do you need to take an asset finance? It's also dependent on your circumstances. If you can afford, if you're able to raise the deposit required, and if, as earlier indicated, the asset that you're acquiring will generate value or reduce expenses for your business, therefore increasing your profitability, then it will make sense for you to actually take up that asset finance. Remember, you could be having assets that you've used over a long period of time. They've either become obsolete or have become expensive to maintain. So when they become expensive to maintain, it only makes sense for you to now just acquire a new asset to replace the old one. Wow. So those are some of the things that are very important to look out for.
Okay, great. Again, lessons there. So under the current environment, which we all know is unique to all of us, the COVID-19 situation, we can't avoid talking about that, right? What does that then, as a challenge, bring to the asset finance as a financing option to the business? And what are your recommendations for businesses in terms of how they can cushion themselves in the short term against the current situation?
Yeah, indeed, COVID-19 is an unprecedented scenario. We've seen a lot of disruptions in the market today. For example, it's the first time that as an industry we are talking about essential and non-essential industries. So I can tell you for a fact that there are those customers who are having a booming business, and there are those customers who either been partly or fully disrupted as a result of COVID. What that has done is that customers in the essential services are still going on to do their businesses. In fact, some of them, their businesses have grown because of the demand within those industries. When I talk about some of the essential services are things like healthcare and food products. Now, in the non-essential, we've seen customers who've been completely paralyzed, e.g., if you're in the tourism industry, partly agriculture, especially if you're dealing with floriculture, where there's totally no demand for your products. So what we've advised our customers to do is to look at the glass as half full, see where they can diversify their business. If initially you're only running a business within the non-essential services, look at opportunities that present themselves within the essential services and try and see how you're going to trade within that space. We also know that there's been a lockdown in Nairobi, so restricting movements of people and goods other than essential goods or people operating within the essential services. So it doesn't mean that you cannot trade. If you're used to supplying building materials within certain parts of Nairobi and those areas maybe construction has been stopped, you can use the same, say assuming they're trucks, you can use the same trucks to now start transporting essential goods like farm produce from Western and Rift Valley back to Nairobi, because Nairobi people still have to eat. So we are advising our customers to look at ways in which that they'll be able to cushion themselves by diversifying instead of shutting their businesses down, because there are still opportunities amidst the COVID-19 that we've seen.
Okay, you've mentioned about bank response to the situation to support the customers. What more has NCBA done for customers under the circumstances?
Very good. So for us, it's business as usual. So if your business is thriving under the current environment, we are still receiving, reviewing, approving, and disbursing facilities for customers whose businesses are thriving. So by extension, you're supporting our partners to endeavor or to enhance their business activities. In cases where customers have been partly impacted, what we've done is that we've agreed to give them some moratoriums on their repayments. In cases where a customer is able to raise interest payment, so we've given them principal moratorium towards repayment of their facilities. And in cases where a customer has been fully disrupted, like the cases I've mentioned in the non-essential services and industries, we've given full moratoriums of both principal and interest. So meaning that for an agreed period of time, they will not be required to pay anything until now things normalize. So those are interventions that will come in. And as a bank, because we do understand that, our customers are very important, we've actually gone ahead and cushioned them towards the obligation of making repayments, because we understand their businesses and we know that their disruption, although momentarily, requires that intervention.
Oh. It's actually interesting to hear of a bank that is working with the customers through this tough journey. That's quite interesting, and wow, that's like a full course in like 10 minutes, Lennox. You said the application takes about 12 hours, or exactly 12 hours?
It takes at worst 12 hours.
to
So
be approved.
there are those applications you're actually approving within an hour or two, depending on the complexity of the application.
And I can make an application online for
Yes,
that?
all what you need to do is to visit our website, the NCBA website, and then within the website you'll see the platform for now application of asset finance facilities, and just go to the link, upload your fill in the details, upload your documents, and the moment you press send, we will have the application on our in our system on our side.
Well, we all understand asset finance much better now, and I can't wait for my application to go through. Thank you so much, Lennox Mugambi, for gracing our show. I'm the host, Mercy Kagwiria. See you next time on Money Mastery, where money makes perfect sense. Thank you.